Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, let's begin with analysis of the largest stock on the ASX, CBA. Given its weighting, it's continued to benefit from those who bought the index. And Michael Gable from Fairmont Equities says it looks as though it wants to head higher.
What I find really interesting is the way it's behaving around that previous high that it made in February. So I've got a blue line there to show the previous high from CBA on a closing basis. So the fact that it got sold off in February, March, it's rallied all the way back to that old high. Now, of course, you'd expect with everything going on with the headlines, you're seeing your stock hit back, get back to those old highs. You'd encounter a bit of selling. So obviously there's investors out there thinking, great, CBA back above 160, close to the old high, I'm going to sell it. But what I've circled there is the price action over the past couple of weeks. This is a daily chart. So the fact that it's managed to hold in there is, it's a big positive. I mean, if CBA going back to its old high in a market that's got a lot of uncertainty, if there was a lack of buying pressure, CBA would be back near 150 again. You'd expect a lot of profit taking up there, but it just isn't happening. So it just shows us that there is still a big wall of buying for CBA, and I think it's just a matter of time until it gets going again and just trends in the 170s.
And a look at the resources sector, and Fortescue is a stock that's been heavily sold off.
Looking back at a bigger picture, it does look like it's bounced off a very major support level there. So, with commodities, they're cyclical. Good time to buy is when everybody hates them, and that has been the case with the commodity sector recently. But these major levels here around sort of $14 to $15, which I'm indicating with the blue lines. We've seen some very good buying come in for Fortescue. Obviously, sentiment will start to improve with the headlines we're getting between the US and China. So I think this is a really good level for it if you're looking to pick it up. I mean, BHP is looking quite bullish as well.
Well, let's now revisit some key commodities in the wake of the de-escalation in the global tariff war. Gold has been a beneficiary of the punitive tariffs as investors sought the safe haven, but now they've been eased, the gold price has tumbled. Prior to the move, Richard Weissman from Weissman Consulting considered the key levels for the precious metal.
It does seem like it's getting a little tired. The first point that would concern me is if we broke 3,200, and then there's two other points. That chart trend line up, which comes in at around 3,100, and then I believe the line in the sand where the bull market would be over is if we were to break that 2970 area. So it's still a bull market, but I think it's worth mentioning these points, especially since people seem to be buying at any level and it seems a little frothy psychologically.
Well, the opposite has been the case with oil, which has been locked in a downtrend. Here's how Richard Weissman saw it late last week prior to the tariff announcement.
If you remember long term, it's been around 5 weeks, but I did discuss this 65 barrel area and how it was in danger, and we did blow right through it and came all the way down $10 lower to 55. That's acted as support short term, but I think it's a very different story than the other risk assets. OPEC seems to be talking the market lower, and they seem to be happy to keep the spigots going full tilt. And we have this potential demand destruction if we do head into some economic weakness from tariff kind of fallout. So I think the fundamentals are supporting this move lower. The trend is down, and 55 is the next level. If we break it, we could go even lower.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.